Hello and welcome back to The Note. We are in a very interesting situation at the moment where a group of different very linked securities are falling together. Gold is at its worst in 5 years. Many emerging markets, stock markets are at their worst in 5 years, perhaps most troublesomely Brazil. Emerging market currencies are down, industrial metals are down, all obviously linked to each other. Obviously raising the issue, is there an opportunity here? Are we at the bottom or are we at least approaching it? With me now to discuss this is a very interesting financial analyst from Financial Insyghts, Peter Atwater.
Thank you, John.
Thanks very much for joining me.
Yeah.
How would you go about your latest research note suggests going long gold and short technology, which has basically provided all the gains for the US stock market so far this year? Why? Are you making a confident call about timing here?
I look at it as sort of Dickensian. Best of times for technology, worst of times for all of the things you just mentioned. And what's important to me is how those extremes are being reflected outside of the market as opposed to in the market. So in addition to all that you've discussed, you have central banks now reacting to the extremes in currency devaluation in places like Brazil. You have political corruption stories that have come out. The other day, looking at Market Watch and some of the other media, there's just been this frenzied coverage of gold. And that's one of the things that I look for is sentiment, extreme sentiment being reflected by the media. And you all do a fabulous job.
We can't help being counter-cyclical.
No.
Let's zoom in a little on Brazil. If you look at Brazilian stock market, A, it's done horribly for a long time. B, historically, it could easily go quite a lot further. The big buying opportunity back in 2002 when Lula was first elected and people thought he was going to be a Marxist. We still haven't got to that extreme of devaluation yet. Also, if we're talking about extra financial affairs, obviously things are very scary in Brazil at the moment, but we're not yet talking about insurrection. The government hasn't fallen. How can we see when a bottom finally arrives? Does this not look more as though we're approaching a bottom rather than that it's already time to buy?
I think that we are approaching a major bottom just based on investor sentiment. I think the bottom in a country like Brazil will be evident by social unrest. So I would be looking for millions of people in the street. I would be looking for a major change in political regime.
To be clear, you're not encouraging that. You're saying that's what you need to
no,
be buying.
Those are things that I look for in measuring extraordinary social unrest. Because markets measure mood the way a thermometer measures temperature. And so I'm looking for things that are outside of the market that would say the impulsiveness, the spontaneity of extreme underconfidence has taken root in ways that are surprising to people. So not unlike the riots that took place in London when the market bottomed there in 2011.
Okay, now let's talk briefly about gold. Again, somewhat similar story. Very dramatic sell-off in recent years, but from what was obviously an excessive high at the top, could still go quite a lot further down quite conceivably.
Yep.
How do you go about gauging whether we have really reached that kind of turning point in sentiment there? How much also does that have to do with what happens from central banks?
I think that you're seeing frenzied media coverage. You're seeing price extrapolations lower. And that's one of the things that I look for is, are people expecting the trend, which is already bad, to keep going? Bad will get worse, and there's the certainty around it. The other thing is the vilification of the gold bugs. Right. And that's something that you only see when mood reaches a major low.
As a columnist, I'm more used to vilification by gold bugs, but
yes.
Okay, I take your point. At the moment, people are behaving as though they've obviously been wrong, and gold is still, over the last 15 years, looking like it's been quite a good investment.
Yeah, we like to put heads on a stick at the bottom.
Okay, I suppose the final question, we have continuing fascination with the question of when is the Fed going to raise rates. And we have in the US this fascinating situation where many other markets have been galvanized across the world so far this year. But the S&P 500, the main US stock market, has been about as dull as it's possible to imagine. It's never been up as much as 4% or down as much as 4% all year. How important, how much is resting on the rate rise? How do you explain why US stocks have been such an oasis of boredom in the world securities markets?
Well, I don't think they have been an oasis of boredom. I think that it's a little like an iceberg. There's a lot going on under the surface. And so you've seen major moves in a number of the index components, both up and down. And I think that there's a lot of story reliance on the move of the Fed. And I think you've seen in the last 12 months a shift from the Fed shouldn't raise rates to it's okay, Fed, now you can raise rates. What troubles me is that the Fed has now been given permission by the market to raise rates at a time when jobless claims are at a 42-year low and everything looks great. And I think that we're setting up another situation, not unlike 42 years ago, where the Fed acts and the markets turn down because you have softening economy underway. And that's what I see in terms of consumer confidence.
Okay, Peter, thank you very much indeed. In conclusion, when trying to track financial markets, certainly look at the prices in the financial markets, but look at the sentiment beyond it. It's perhaps the only way to catch those big changes in sentiment. Have we reached a turning point in any of these markets we've been discussing? I suspect not, but I certainly agree that we do appear to be approaching one.